Hello, and welcome to a new episode with your host, Vinney Chopra. I'm so excited to have you here as we dive deep into the world of real estate investing, syndications, abundance mindset, and building generational wealth. We are excited to be in the top 1.5% of the real estate podcasts. Got number 11 actually out of top 50 real estate syndication podcasts. Thanks to you. Each episode, we bring powerful insights, expert guests, and actionable strategies to help you take your investing game to the next level. Whether you are a seasoned investor or just getting started, if you love what you hear, please take a moment to subscribe, leave a 5-star review, and follow me on social media so that we can never miss an episode. Your support helps us continue sharing valuable content with more people like you. Now let's jump into today's episode. Thank you.
So, Brother Franco was there with you. Yeah.
Right.
And everything went well. Everything, yeah.
Yeah, everything went well. It was fun to actually sign some ink and hang out together. And I don't know if Franco shared even in the evening then too. We got the evening before the close, we were actually able to have a casino owner come up to us, and that was one where I blew an opportunity. A gentleman who's worth a lot of money in front of you, and you're like, he throws $100 down on your table. You're like, what do you say? And it's something more about how we can partner together, but instead just shook his hand and let him go away. But all good.
Oh, very nice. Very nice.
Yeah, he's the owner, and then he says hi, he shakes their hands, and then he walks away, and then Thomas and Mike check him out, and oh no, he's the real deal. And I'm like, we were like in shock. What just happened there? Is he really the owner? Is he a manager? But he's legit.
Oh, yeah, that's awesome.
Checking out his properties. That's all.
Oh, awesome. And the second one, 40 unit one, you're still in the works, huh?
We are, and actually have a little bit of an update on that. So this is a newer update as of today. So the financing that we were originally looking for through Brother Walter's friend who goes to my church.
Remco, is that the one company he's using a lot?
Dominion Financial Services.
Oh, Dominion. Okay, this is different.
Financial Services, yeah. But he had a very specific person that he was working with that seemed a little bit more, not creative, but just more aware of everything that they could do or what have you. And we couldn't get a hold of them. And so Mike had talked to somebody else, which kind of just put it out of the ballpark. But he got a hold of him today, and because he wanted to call him back for other things as well. And it actually is very much back on the table. So whether we're doing a syndication for it, or whether we are just quite simply just looking to JV it or private, whatever it is, the number now. So what they'll do is 11%, and they will do you have to have 20% down for the purchase, and then they will cover 100% of capex.
Of the capex, yeah, okay.
And then it's 11%. There's 1.5% at the exit. There's not closing costs. Yeah, there's not closing costs associated with it. But really what that does though is, because we wanted to at least put in $6,000 per unit. The roof, we had our roofer actually go through to give us a bid on that, and we have it at 145, but he would get it cheaper for us. But we were estimating 200, and so it came down much less. And so we probably would be more around 100, I would say, but just for buffer, we still had that in there around 145. With that being said, the raise, what we would need, goes down from around $1 million, around 969 of where it was at, to about 400,000.
Oh, wow.
So it is drastically different. Now, we would have to obviously quickly get into another loan product then after that goes through. But the biggest thing with this property is that we were going to get to break even right now with getting 10 of there's 10 vacant units right now. If we were able to get 10 of those in and just renovated and get new tenants in there, we would be in a good spot for a refinance at that point. So that is very doable, can be done very quickly. And for whatever reason, actually not for whatever reason, we did get a little bit more understanding and background on this. This is a big, important family in the city outside of where this is located at. They had purchased, they just how there's family names everywhere that own lots of properties. This is a family that bought a lot of properties and built a lot of properties. And then the second generation came in and reaped the rewards of them.
Got
now,
it.
the
Got
second generation is getting to the age where they just want to leave them all now.
Yeah.
And
Yeah.
this property, when we ask, how would anyone just let a property not be at market rents or not even care when you have a whole city of properties and you didn't do anything for it? You probably wouldn't care, right? If they were just given to you and it wasn't yours to begin with, right? It's not Vinney Chopra, it's Monica's children dealing with the properties.
Yeah, it's going to be big time. I think there was an article I read how many 73 trillion will be passed down the pike in this generation because in next 30 years or something, because baby boomers, as they are turning now seniors, they're the millennials or whatever, or even some of them are early baby boomers, will be transferring of wealth going through the country. I thought it was 73 trillion, if I'm not mistaken. So that's
significant. Yeah.
It's a big number. So there will be opportunities, definitely. And it's for us to find where those are, the gold nuggets, right?
And this is where it's really much more of a gold nugget, not for this property in and of itself. This property will be awesome. Don't get me wrong. Like this will work well, but to be able to have a successful transaction with this family, to have them feel comfortable and be able to have that door opened for the transfer of the rest of their assets as they look to offload. That's something that's going to be of immense interest. So it's on us to move quickly here. We'll figure that out. So we'll have to figure out.
Definitely you want to start warming up your investor base because, and what would you give them, right? That's the other part. If you're raising 500,000, when will they get their first cash flow? That's what most of the investors want to know, right? When will I get the cash flow? And then, of course, what's the upside? And then when would I get that? And when will I get my money back? Those are the three things, right?
Yeah,
the cash flow, the upside, and are there any tax advantages to them? Because bonus depreciation will come into play with all this renovation and everything. So cost seg will really help in 2026 if you will close on that.
2026, yep.
Now this one, the one with the 10 unit, you're going to do cost seg this year.
So
because is this closed or no?
So we closed on the 10 unit. So for the cost segregation study for the 10 unit, so the only thing that we were looking to do for that, if we were going to get it cheap enough for the 10 unit, because we're not doing massive renovations across the board.
You should. I'll put you in touch with the company where I think I paid 3,000 only. And we did it for my RALs in Arizona. They did a very fine job. And they were able to do it without going over there. They did a video with the property. Yeah. So it's much cheaper. I don't know if you have done cost study before, cheaper than 3 or no.
Yeah. So we have a call next week with a company for that. And the difference for them is they don't have, for the in-house architects and how they work, they do it cheaper, but they give a disclaimer that this will be significantly cheaper and it should cover the majority, but it's may not get all of the nuances if you were to pay the $10,000 to $15,000.
No, never 10 or 15 for cost seg at all. Maximum I paid is 4,000 or 5,000, maybe 6,000 at the maximum. 300 units apartment complex. So there are a lot of them out there. Anyway, I just thought
if you could share, absolutely, I would greatly appreciate that, because obviously their low price then that we're going to be discussing may be not as low as it could have been.
Yeah. And if you like that, they also I just heard a podcast where these cost segs are also AI driven now. What? So they have
this. They should be to an extent, right? Because that's
exactly.
The architects to go
if you feed everything into it, I'm telling you, it will probably give you the number almost near to what you really want. You just prompt ChatGPT, consider you as a cost segregation expert, CPA, And this is the closing statement. That's what I would do. Literally, this is the closing statement. These are the 10 units. This is the square footage. This is this building age and roof is good, blah, 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 blah. This is the address. ChatGPT will do it for you. I'm telling you.
I'm doing that regardless now, just to even compare.
No, I believe in that because they save me so much money, even on my residential assisted living, one home, which was 1,000,003. So the cost study came back, and man, I could write off so much, which I did. Idea. Okay, so that's positive. How are other things going? What's your goal for 2026? Brother Franco, I'll just ask you. Oh, Brother Daryl is coming in. Good. There we go. So I think, this is that time of the year that you want to really crystal clear what you want in 2026 and then contemplate on it, think about it, and see what goals need to be set for January, February, March, first quarter, then second, third, and so on. I'm just finding, I know the 0.25 went down today, right? After all this bickering and everything. I don't know what the heck is going on.
Yeah, no, everyone kind of knew that it was going to happen. There was a couple weeks ago where they were like, "Oh no, they're not going to do it," but you're like, "Okay, whatever, sure." Like we've talked about, if we know one thing is that they're going to be too late to do something. So the longer they hold out, the better it is for us here and what we're doing. More people are going to want to offload properties because they can't refi into a lower rate. So better for us.
So true, what you're saying. Yes.
So that's fine. We're doing the same thing to 2026. I haven't really thought about goals for 2026 in this world. Even in my W-2, I haven't even started that. It's just been a busy kind of month, so to speak, with the baby and everything. But I will start looking towards that. What I just did is I started meeting with one person every day, but then today I started hitting the phones, and I spent maybe an hour like thinking, and it was like, boom, here's a dozen people. And I haven't even started going through my phone and real records and who would be interested, who's talked to me about this kind of stuff. It was just off the cuff, like someone that connected with me to say hi. And I'm like, oh, that's totally someone who would be interested. I dug in today and started my spreadsheets of who would invest, who to call. I started reaching out, started setting appointments. So I'm like full board, especially with Thomas on that 40 unit as well. I love that we're giving two options, whether it's the hospitality hotel or the multifamily. It's, hey, look, here's two options, because there are some people I know that are into multifamily that they're doing it here locally, but I'm like, there is a lot better reward going out somewhere else. And fortunately, meeting up and teaming up with Thomas, it's going to be a big deal for a lot of those.
I love it.
So I'm super pumped, and especially with you telling Sharon today that the hotel, you did sign the docs. Between that and the commercial, the multifamily, it's okay. We've done it. I'm in on some of this stuff now, right? So you have skin in the game, so to speak, even if it's not on the next deal, but you have the experience and say, hey, look, these are the guys to work with, right? This is what I've come across. So it's really cool that way versus just trying to fundraise without actually having done it before.
Surely.
Totally. And Thomas, I have a question for you on the 40 unit, right? Because that's a biggie for me too. So you're saying even with the 11%, if you rented out or leased out the other 10 units, that one would break even as is?
So the numbers didn't go up too much for when we went from like the 7 up to the 11%, to be honest. So we should be good there.
Wait a minute. If you were thinking to raise 950,000, but now you need only 500, so the COC should go higher. If your assumptions were the same for the cash flow and upside and everything, but you got better terms with the lender, is that what I'm hearing, Thomas
not
Franco?
Not better terms. Going from a 20-year loan to a 1-year loan, though. The amortization rate would be the same, and we're looking at interest only potentially.
Oh,
But
got it. That's where it's different. Okay, got it.
that's where
Okay.
it's different. But yeah,
Got it.
what it changes, we have, once again, this all just transpired today. So they provided us the loan docs and everything. So we're going to fill out the information because there's not a hard credit pull so that we can have everything finalized with them just to be able to see. Because we still have to, through the actual real estate broker too, they are getting back to us and seeing what they can do in comparison. So we'll compare both of those loan products. But either way, though, like what is different will be, okay, what does that mean then when we do have to go into a new loan for those investors, to what you were saying earlier, Vinny? Hey, when am I getting my money back, et cetera? So if we can get it to a point in that year quickly to get to that evaluation much sooner and then have it refinanced, that opens up new possibilities as well, versus before we would have been looking more at the 5-year exit more.
Gotcha. Okay. That's a better deal, actually. If you can get the CapEx money from them and do the renovations and everything, now you already increase the value. So whatever money you get back, I think if you're doing syndication model, 100% of that extra money has to be returned to the investors, return of capital, right?
Yeah. So Vinney, in a case like this, you were talking to me about the hotels. Is it 70-30 you would do on multifamily too?
Yeah, I've been doing 70-30, 50-50. Early years in my life, I used to do 60-40 because the deals were so good.
Yeah, those are different days.
Yeah, those are different days for sure. They don't come back anymore. They won't come back, especially in multifamily. In hotels, they might come back, by the way, because I'm looking at 4 other hotels right now. We got one accepted on Friday with my partners. Brother Daryl, I just want to let you know, Notary was here today. So I signed the deal on the legacy. You're part of that. Brother Franco is part of that. And now we got a Hilton, a brand new, no, not brand new, 1918 to 2018 built right there in Florida. So we got the LOI accepted on Friday. We are just closing this tomorrow. We got the second one. Monica already designed the brochure, everything. It's coming close to 19% IRR, 19%. And we start paying dividends, 8% pref. That's what we are doing in this deal. 8% pref first paid to our investors. Then whatever is profitability left, 70-30. So our investors will get paid first in this deal because it's a cash flow deal. It's a totally cash flow. It's doing very well. 86% occupancy. ADR is strong in that whole market. All that good stuff. I'll share that as we get packet together. I'm really excited about it. This is a good one. Then
When
Brother
would you look to
Umang, I
exit
talk.
for that?
Huh?
Are you
Yes,
looking for a traditional 5-year exit on that, or would
5 years? Usually we put it at 5 years. That way the IRR, it just stretches it out. If you could say 4 years, IRR will be higher because you're returning the capital back earlier, right? So in our model, we only do up to 5. That way, this 19.5% IRR is based on getting paid every quarter on the quarter, 2%, 2%, 2%, 2%. So it's like a 8% coupon, we call it, pref rate of 8. And then at the end of the year, my new partners, what they do is they're used to doing this. And I said, okay, let's do it. Let's share the wealth. That's the only way to live, right? So once we have the whole profitability of the hotel by December 31st, we take out the dividend we already gave them, which is 8% of the pref, then see what's left over, then do 70-30. So our investors will be getting even more than the 8%, the 70% of the profits also on top of it after they get paid. So it's coming out very nicely. We are just putting some numbers together and everything. Yeah.
CapEx value play with this one, this new property?
Not that much, Daryl. Only we allocated 5,000 per unit for the PIP or CapEx, because it's beautiful looking property and nothing needs to be done. We might just change a little bit carpet and paint or something. That's all. Nothing else. So it's a good value play in the sense that it's been making good cash flow, and the compression will happen a little bit in the cap rate. I think we are buying at 9.6 cap, and we are exiting maybe at 9 in 5 years. And it's very close to tourism, to hospitals, to universities, and so forth. It's near Tampa, in Tampa, actually, Tampa, Florida. And
an exit on this particular project then by 5 years.
5 years, yeah, 5 years. That's what we are projecting. But if we reach our goal of appreciation in 4 years, then we could sell it in 4 and then, pay back the money quicker. Then the IRR will go higher, because at this time we are calculating to return the capital back at the end of 5th year, because that's at the same. Yeah. Anyway, I just wanted to show this also. I've been working with my team, with Asma, my assistant. Now, her job is to get me lots and lots of these new clients, new investors. You could see that right here. So we have a Google Sheet design. Priority, we are putting priorities. We are putting date added, notes, name of the new investors, website or LinkedIn. I told her yesterday, I need those links so that before I talk to them, I look at their website or LinkedIn profile to get myself synced in, who they are, right? So you may like to do the same way. Phone number, email address, money to invest, how much. A website is here also. Anyway, follow-up dates and all that. So it's all, look at that. We have been doing this for some time. Look over here. So we keep good track of all these things, because you got to make sure you are making a good list together of your investors, because the power, the energy comes when your investors are saying, you know what, I am ready. I'm ready to invest in hotel or multifamily or whatever.
Vinney, I got a question for you on that sheet. The way I did it was I did it on Excel and with different tabs. So I started with the first tab at 100 to 250, the next one at 500 to 1 million. Then I put soft commitments, then a new sheet with soft commitments, hard commitments. Within there, I would put whatever the project is. So I would move them over into that, and then there's an active investor. For example, someone that's already put money into a project or whatever, they're already active in there. But then I still leave them in your basis of whether they invested 100 to 250 or 500 to 1 million, and I have those two separate. I don't know. That's the way I'm working it. It seems like you're going vertically. I went more horizontal in the way I did it.
Okay. Oh, beautiful. Either way will be fine. Now, these are brand new investors. Nobody has invested with me yet.
Oh, got it.
This is my
That's his funnel tracking
warm
sheet.
list.
Prospects.
This is my warm list. We're going to send to all of them.
Yeah.
Marriott closed. Sorry, we missed you. Because some of them never got on the bandwagon and so forth. So my other list is at a different place.
Got it.
Yeah.
So that's like a more of a prospect.
The money list is at a different place.
Yeah.
Money list.
Keep them very sacred on the other
It's
side.
password protected, yeah.
No, but that's exciting. I hope everybody listening or watching us, some people watch us also afterwards. We have the recording of this, right? So the key thing is you got to, as a syndicator, as a fund manager, 2 plates you want to spin every single day. One is investor plate, like you're doing, Franco, right? Meeting at the golf course and talking to people, right? 2, 3 people every day. And this could be applicable to Daryl, Brother Daryl, and Thomas, I'm sure you're doing it too. The key thing is to keep that humming on this side. Second plate is finding the best deal. That's all. Finding the best deal and joining it together, move on further and further.
Absolutely.
Fantastic.
Hi friends, this is Vinney Chopra from here in Danville, California. And you might be saying, hey Vinney, what are these over here? I wrote this book a few years back Apartment Syndication Made Easy. It became top seller. I came from India with $7 in my pocket. It says 500 million. It's going to be 1 billion very soon, very soon. I'm right at about 850, 900 million. And then I'm ready for the next billion. Actually, you will see that happening, 2 billion in this book also. The other book I wrote, which has been a very big positivity, has been my life. Always, I've been married 43 years with 2 children, and the beauty is to be positive, the mindset that can take you to all the places in the world. And that's the book that also became big seller. My 3rd book, Senior Assisted Living, is coming. So do yourself a favor, go ahead and click the link below to get free copies, audio copies of these books, even printed copies of these books. If you, printed means digital, if you can't afford it, but I would highly recommend for you to get these, or go to Amazon.com. Just go to Amazon. I got it in soft cover, in hardcover, in Kindle, in audio, also the Spanish version of this book also. So let's crush it, guys. I know you can be successful. I know you can do the kind of things that you want to do in life and have the streams of income and know how to really, educate yourself so that you could become a strong force in this world in real estate. I know you can. So take that step. Don't just be on the sideline. Take charge of your life. Take charge of your education.
Vinney, I have a question for you.
Please.
That started coming up is the IRA. And I know you've talked about investing in real estate using your IRA. So
yes.
I know you're not a CPA, but can you give me a little more color on how that works for somebody?
I would love to. There is so much money in the IRA, retirement plans, 401k, cure plan, what we call IRA, to make it SD IRA. What is that? SD, when you put in front of IRA, it's self-directed IRA. Aha. That's the beauty. A lot of people don't want to know about it. They are not even familiar with this term SDIRA, which is self-directed vehicle, where you take your IRA, part of the money from the Wall Street, take it out into self-directed vehicle, which is custodians are there. So there are IRA custodians like Equity Trust, like Forge Trust, like U Trust, Advanta from Florida. Advanta, I've sent a lot of investors there. And Brother Daryl is prime example. He's got his retirements in different places. So what you do with that is now your self-directed IRA can invest into a syndication, invest into a deal. All right. But it cannot be where you control the deal. I think that's what it is.
Okay.
You cannot control that deal. It has to be with somebody else. That's why my retirement funds are invested with other partners, not in my deal, because at arm's length, it nullifies then everything. All the benefits of IRA are gone. What is IRA? It's actually postponement of the gains and the equity gain. The cash flow goes into the SDIRA. You cannot spend cash unless you do minimum withdrawals, just like Brother Daryl and I have been talking about, last few days and so forth. So SDIRA is the best vehicle. You should talk to everybody about it. They say, you know what? I don't have cash in the bank. You say, don't worry about it. Actually, I want to meet with you to talk about self-directed retirement plan. That's it. I'm not a CPA, but let me show you. And we could go to actually ChatGPT right now, and let's just learn it together, brother. I have white sheet on it and everything, but we'll just go here. And I've been using all kind of programs. You can see here, I'm with Grok, I'm with ChatGPT, with Perplexity and Gemini. I'm with everything. All
so
kind
of simply put, you move it into this self-directed IRA, right? With a custodian account. And then they will, sell off whatever you need to do if it's in different stocks and so forth. And then that money goes into a syndication or someone else that invested for you in a property. Once that property cash flows, that money goes back into that custodian account.
You got it, brother.
Okay. And then they disperse only what they would do on a minimum draw. Unless they wanted to disperse more, then they pay taxes, just like a regular IRA. But you could, but you just take it as income.
As income, you get totally. That's exactly what you said it so rightly. Now you actually, wherever, if you have stocks or in the Wall Street, wherever you have money, you only sell as much so that you could put it into self-directed IRAs. Now, in my case, I even did something in the many years. I took my IRA, changed it into Roth IRA. Now, that's a different vehicle altogether. What you do then is whatever you convert from traditional IRA into Roth, you pay taxes on all that money one time.
On your gains or on all the money?
On all the money. On all the money. Because now you're converting it into Roth IRA. I'm not CPA, but that's what it is. Then any money you make on that money of the Roth IRA, you never pay taxes ever till you die. So if that Roth IRA doubles, triples, quadruples 10 times, you don't have to pay a dime of taxes any year, anytime. Yeah.
And then going back to moving into a custodian account, are you saying that you have to sell from your IRA to then change it to the custodian account? You can't just transfer the...
No, you cannot. You cannot transfer. Okay. Yeah. It is a transfer, but you have to make it liquid.
You got to make it liquid. Okay.
Liquid.
All right. Because at the bank, what we can do is we can transfer that. We don't actually have to have them liquidate. So this is a little different. Okay.
Yeah.
But when you liquidate, are you paying taxes before you transfer, or because you're transferring, you don't pay taxes?
Okay. Zero. Nothing. It just transfers.
Not until it hits you.
Yeah.
Personally. Okay, got it.
Yeah, exactly. Okay. So let's just take a look at a self-directed IRA, SDIRA, which I just mentioned, is an individual retirement account that gives you complete control. That's the beauty of it, of your investment choices, allowing you to invest in alternative assets. See, in Wall Street, my IRA account in Robinhood or Fidelity, Janus, wherever I have, right? Charles Schwab. So that money can only buy stocks, ETFs, and REITs. You can buy REITs, by the way, over there. But you cannot take that money, invest into like our deals, the syndication deals and all that, beyond the stock. Oh, there it is, right? Alternative assets beyond the standard stocks, bonds, and mutual funds offered by typical brokerages like Fidelity and Vanguard. Legally, an SDIRA is identical to a standard IRA. The difference lies in the custodian, which I just mentioned: Equity Trust, Forge Trust, Newmark, NewView, Utrecht, all these people. Advanta, standard custodians only hold publicly traded assets. Specialized SDIRA custodians are willing to hold custody, alternative assets, real estate, there we go, gold and private equity. And they vet the deal with you. That's the other good part I like about custodians. We have to send the PPM, we have to send operating agreements, everything. So they are like, oh, Brother Ankur is coming in. All right.
What do they charge? What is a custodian? What do they usually charge?
Different fees are there. Depends on $200 a year or $250 a year, like a flat fee. I have seen, Brother Daryl can mention Advanta, I heard, is cheaper. UDirect is cheaper. These are smaller custodians.
Oh, so it's not like a 1% type thing, like a brokerage.
No, never. No, not at all. It's because they are not financial advisors. They are not financial advisors at all.
But they are vetting the deal. They're making sure you're not getting bamboozled, so to speak.
Yeah, exactly. Common SDR investments, real estate, remember right there. Private companies, startups, you could put money there. Precious metals, cryptos, all that stuff. And then over here, prohibited investments.
So letting you do crypto?
It says
let you do crypto?
I think so, but you have to profile to put that? I'm sure you have to ask the custodian if they allow you or not.
That's
No?
interesting. That's funny. Okay.
So I'm glad you asked that question, brother. Brother Ankur, how are you? Yeah, good to
Vinny,
have you.
how are you doing? I've got my
Doing
friend Dave
amazing.
also. Hey, Vinny, we got Dave here as well.
Oh my gosh.
Oh.
Hey,
So,
Dave.
you know what that means? Like both Dave
Yes,
and I
the
are on the same.
winery, the winery, the
It's
winery.
closed, baby. Yeah.
Oh,
We closed
congrats.
it today.
Oh,
Awesome.
congratulations.
Congratulations,
point-
guys.
Yeah.
Oh,
Yeah.
Congrats.
that is
3.75 million closed. Everything done, dusted.
awesome.
So it's
So
pretty
happy
surreal.
for you. So happy for you. I
Great.
signed the notary this morning. We close
Ah.
tomorrow on the Dallas Hotel, the Courtyard
Oh,
Marriott tomorrow.
congratulations.
Thank you. Thank you. And the beauty is, it's closing tomorrow. We got LOI accepted on a Hilton in
Oh,
Florida, brother Dave, in your
nice.
backyard. We got the LOI accepted, $6 million revenues per year. It's a cash flowing
Whoa.
machine, 86% occupancy average, 86.5%.
Is that the Marriott? Or
It's a Hilton.
Hilton.
The new one is extended stay Hilton. It's that
Oh,
one.
that's
Yeah.
amazing.
But congratulations. I'm so happy that you are able. Now, this deal is great. Explain again. Maybe, we might remember it. You get the whole shebang.
Is that the
plus
one
the
that had the wedding
inventory.
venue?
Yeah,
Is
we
it?
got like everything, like the whole shebang. There's like of course, it's like a very popular winery out here in Washington State, and there is just the real estate, right? Is just nuts, right? So we have 20 acres of land, and with beautiful curated garden. We have a very nice restaurant inside there, and it's got, of course, the winery. It's
Yeah.
got a speakeasy, and they basically have like wine as well as spirits. And guess what? So we are also going to get into events business because they have an event center now, which we can utilize, which is like brand new, Vinny. So that's basically going to be all pure upside because they have not been utilizing that. Yeah. So that's like just full capex ready for us to start using.
I love it. Oh my gosh.
Yeah.
Wow.
And so, yeah, we are just super excited. We are soaking it in, of course. And
Some
then,
wine bottles from while you were closing the deal, picked up some wine bottles.
yep, slip in some wine bottle.
Awesome. Congratulations. I'm so proud of you. It took you long. It was gone back. Huh?
Almost 2 years. In fact, last time was a year back. We were already in purchase and sale agreement, and then it fell through. And then you will not believe it, Vinny. And then and for the equity, we had even raised like almost $1 million. And then the investors were disappointed. Hey, what happened? And like this thing.
Yeah.
So now this time around also, like then the same investors didn't come through. Right, because they are like, oh, we invested somewhere else now. So we had to figure it all out, but we made it happen. But the thing is, the beauty is because we did not, so we did everything ourselves, raised the full money ourselves. We own 100% of the winery now.
Love it. Oh my gosh. Wow.
Yeah, we pretty much leveraged entirely. So we own 100% of the winery.
And we saved 1.75 million by not buying it a year ago.
Oh, look at that,
Please.
Dave. This is amazing. God has its ways. God has his ways. They backed out or whatever happened, and year later, you were able to get that at that price. Proud of you all. Oh my gosh.
Is this the one that you can do camping at too? That you guys were gonna do something like that, where you can go and camp in a whole separate area?
Glamping or something?
Yeah. They won't. We don't need to now because our value add strategy. We were considering that, but this time now that they built out the event center, we can make more money in the event center than we could ever. Like, cause we can rent it 110 seat. We can rent that to weddings and different things, and then because it's on our site, they have to buy our wine and our spirits while they're at the event center. So
food and
they
beverage,
can really do well with just the event center.
Oh, love it.
Very cool.
Love it. I know I saw some pictures. It's a beautiful location, close to the water, everything. I remember that, huh? Is that right? Yeah.
Yeah, it's westportwinery.com if you guys want to check it out.
Yeah, Westport Winery. Yeah. Let me share the screen. Congratulations. So proud of you.
Sure. Yeah. Okay.
Right there. Westport. Let's see. West Point.
Westport.
Oh, Port. Okay. Port.
Yeah.
Winery. Yeah.
That's right.
Winery.
Whatever
Dot
basic.
com. .com.
That's right.
Okay. Beautiful. Hold on. Here it is.
Wow.
Oh my gosh. Congratulations.
Thank you.
Yeah. Very
Oh,
cool.
so proud of you both. Look at that.
Very cool.
Oh, Ocean Daughter Distillery,
So
Seagrass Grill.
I
Oh,
don't.
that's the
Yeah. Wait.
hotel, the restaurant.
Yeah. So don't even know like where to begin, right? Because see, we got an Airbnb. We got Airbnbs there.
Yeah.
We have the winery, of course.
Lodging. Yep.
We have the lodging. We have a international. So now the International Mermaid Museum is
Yeah.
actually a non-profit, which is part within our. That's the real estate that's within our land. So it's our property, but it's
Yes.
treated like a non-profit. And
Wow.
that
Wow.
gets people in the door because we can advertise through it and it gets
Totally.
funded. The
Yes.
advertisement, yeah.
Oh, this is beautiful. Look at that. Oh my gosh. This is marvelous. This is a jackpot. Look at
Yes.
that.
And best
Proud.
of all, Vinny, best of all, we were able to seller finance
Okay.
a majority of it.
Wow.
Okay, so
Dave is a guru of that. You
oh
both
my God,
are.
yeah. No, we were able to seller finance. That was the best. That is something we weren't getting the last time. So not only we got a better deal, we,
Oh, I love it. I love it. This is so exciting. So exciting. And congratulations. And what a beautiful day to share on the. I'm recording everything, by the way, like we do every week, events and all that. And how much was the purchase price, if I may ask now? What was this?
yeah. So we got the whole thing for 3.75.
Oh my gosh. Wow.
Yeah.
Wow.
Previously, it was going to be 5.
5 something. Oh, there is the picture. I just saw the picture.
5.5. Yeah.
Look at this. Oh my gosh. This is, I think, the deal of the century. You closed it right there in 2025. You'll get a cost segregate and a cost segregation.
Cost segregation.
Yeah.
So our CPA is gonna fly in tomorrow. Like he's our, we have minority partners. They're gonna, so we're definitely going to do cost seg on that, be able to like kind of depreciate.
Beautiful.
Yeah, and this is the new event center.
Look at that. Oh
and
my
it's just
gosh.
gorgeous. Like it has the bridal center, everything, the room, and it's been pretty well done.
Love it. Oh my gosh. Any questions, Daryl or Franco?
So all the winery and the restaurant, you guys keep the management and they're running things until you dig through and maybe find new people or decide if it's working with them and keep them, or how are you approaching that?
Yeah, no, definitely. We are totally keeping the people who are there. They're really awesome. They're actually really smart. We got to talk to a lot of them, met them like once before too, and we had a general sense of what folks do. We might have to change a few things here or there at best.
Sure.
But of course, we are going to learn as we go. We are going to figure out like the ropes, and then we can decide where to add on, where to optimize, and all of that stuff.
Marvelous. Wow. How about the inventory? Were there some wine bottles in the inventory? You got it too?
Yes. So that was part of the deal. So we got that as the working capital. So we are set right now for. So we had to get it right, because otherwise you can't. It's getting the car without the engine.
I know exactly. You want it. That's what is going to operate. They cannot shut the business down. Oh, look at all their gift cards, merchandise. This is a good deal.
Yeah, and this doesn't.
Go ahead.
The
Huh?
website is dated. We have to do a lot of
Yeah,
work there. But
totally.
that's the simpler thing now with AI
Yeah,
and everything. I
yeah.
mean, like that's the
Very easy, very easy. Oh yeah, Chat GPT, you could feed this actually give it to Chat GPT, it will design the whole thing for you.
yeah.
The land and building and all that alone is
Yeah,
worth.
exactly.
So Franco, you brought up a good point because I
Hmm.
have one of my investors was actually they have an Airbnb in the same town, but closer to the
Okay.
ocean though. And basically his plot is less than an acre and he has a house there.
Huh.
That itself sold for some $700,000.
Yeah, it's
Okay, so I'm
wild.
I'm not saying it's a for like comparison, but
Right. But
man,
still, yeah, look at
yeah,
that. Oh my gosh, that's awesome. Wow. I'm very proud. Very, very
yeah,
happy that you shared that with us. That's fabulous. Oh my gosh. Now the work starts, right?
yes.
So
Maybe I don't know. The first day was like we were a little bit of mixed emotions, right? Of course, we're the signing is the exciting part, but then is oh my goodness, it's all happening at the same. Is just, but
So
yeah,
when do you already take over? Because if the recording is done of when do you take over?
we have taken over technically today.
Okay.
Recording is there's like a few small formalities left.
Sure,
The signing
sure.
is done. The recording is also going to be done by tomorrow.
Yeah,
It's
yeah,
pretty much
yeah,
considered done. Like they
yeah.
have everything they need.
Excellent,
So yeah,
excellent.
it was like earlier this morning, and
All right,
yeah,
you'll be specialist. You already are in a year and a half. Now you wanted to get for another winery now. I know you're looking one
we
over there in somewhere else too. I remember you shared.
yes, there is like one in Eastern Washington, and then there is
Okay.
another one up in Northern Washington also. We'll have to pace it. We're making a game plan, Vinny. We'll have to pace it out because there are certain things we have to do for this winery first.
Exactly.
Uh,
Don't take the focus
yeah,
off. That will
yeah.
really get set up for your like a franchise model. Then the next one, what to do and everything will be much easier. And you definitely want, I don't know if you want to sell some equity to some investors, that will be great. But if you own everything and it's going to cash flow like crazy, keep it in the house.
So what is your
Yeah.
first
Unless
three
we are good.
steps, guys, to profitability and cash flow? Your first three steps.
Ah, yeah.
Yep. No, totally. I think our first focus would be like our number one focus right now is to make it completely automated
Hmm.
because all the systems and processes are like very ancient. So like
I see. Yeah.
we'll have to get that like fully up to like remote monitoring, let's just say that to build it to that. And once we are done with that, then of course, there's seasonality too, Winnie, and so we have to be prepared for like peak seasons versus lower seasons.
Exactly.
But
Yep.
we'll do. The
Yep.
biggest part is done, like the hardest part.
Awesome. Awesome.
Yeah.
Awesome. All right. Another good news, brother Franco and Thomas. They closed on the 10 units. They are looking at Franco was there last week,
Oh,
right, Franco? You were
congratulations.
there?
Yeah,
Yeah.
yeah.
So it's
It's,
really
different,
happening
yeah.
in December. It's happening, which is exciting. And they're looking at 40 units also, which they got a good terms from the bank. They're going to give them the capex, and
That's
now
right.
they have to raise only 500,000 instead of 945,000. So that's very exciting.
Oh,
And
that's
10 units
amazing.
are empty already. They can renovate those quickly and even refi pretty quickly. Thomas, you want to tell
That's right.
Franco? Yeah.
No, that's correct. You're spot on. So we're excited, and we'll look to keep everyone posted as we make progress and as we get
Yes,
this
yes.
look to get under contract.
Mm-hmm. That'll be
That's
beautiful.
in
Beautiful.
Pittsburgh, right, Thomas? Or Pennsylvania?
Outside of Pittsburgh. Yep.
But
That's
outside
about
of Pittsburgh.
45 minutes outside of Pittsburgh. Yep.
Jeanette, right?
Congratulations, man.
Jeanette or
Correct.
something. I remember
That's correct.
hearing.
Yeah.
Hearing that. Sometimes I remember things. No,
And
this
that's
is so
exciting.
wonderful. So wonderful. So we were just discussing today. I know Franco asked a good question, how to convert IRA to self-directed IRAs. And that is amazing with investor base. Many of the shrewd business people, they don't know that they could take full control of their IRA by doing the self-directed vehicle and having custodian. built in. So that's what we were discussing today also. Yeah.
So in both Thomas and Ankar's cases, are you going to be using any property managers with your investments?
I use property manager for my rentals, but for this one, we already have somebody on staff who does the property management. We are contemplating whether we should use Airbnb at all because their fees are so high. So we might just get people directly through the website,
through
and
the
have them like
website,
book from
word
there.
of mouth, and
Yeah.
things like that. Sure. Good
Yeah.
point.
So that time will tell. We'll have to get, of course, like the data on everything and figure out what works or what's not. But we have not outsourced that. We just have it in-house staff member who does that.
Very good. Very good. Sure.
And Daryl,
All
the
right.
question for ours, it'll be traditional property management. For the 10 unit, we're having a 2-month grace period with the current property managers just to have it handed off, just especially because of the timing of the close. It was right at the beginning of the month. But then apart from that, though, for that 40 unit, we would be hiring dedicated property management then across the board.
Awesome.
As it relates to under our own company, we would have somebody.
I think that's what I find. I think if you can get a good, solid management company, they don't nickel and dime you to death, and they don't put extra fees and all that. Today, I was having a good meeting actually in the hotel chain. It's amazing how many times they overbill within the system. And you can really see what you could really pay a good contractor outside, and their price is 20% more. So that's why we want to self-manage our hotels. In this one, with the Legacy Hotel, we are buying, closing tomorrow. We are 45 days, the Marriott chain, we had to agree to that they'll manage for 45 days. And by that time, we will go through the interview process and everything with the personnel. They didn't want people to just say, hey, you have no job tomorrow, that kind of thing. So anyway, so it's good to have some kind of system set up. Yeah. All right. Any other things we should talk about, or should we wrap up? Or Brother Daryl, any questions? Or Franco, any more questions, brother?
Actually, I have one question as it relates to the self-directed IRA topic. Do you have the one thing I want to create a video or do a webinar for self-directed IRAs? Do you have any contacts still that would potentially be willing to do a webinar potentially, like in Advanta or elsewhere? Like the equity trusts are a little bit too big for.
Okay, you know what? I'm glad you mentioned it. If you go to my YouTube channel, I interviewed with them and I presented with them, by the way, with Advanta quite a few times. So what I was going to say was, let's just go here to say Advanta. Let's say Advanta, 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 and Vinney video or something on SDIS, self-directed IRA, let's just say that. So see what it comes up. Maybe it will come up something. There are quite a few others. Mine is not there yet. Maybe this is the one, no? Self-directed.
I got you just so at the very beginning for my search, I got you right out of the gate. So you're on their podcast.
Did you? Oh, did you? You want to share? Which one is that one? You want to share the screen? Which one is that one? Yeah. Maybe I will send that to Brother Franco too. Brother Franco, that will kind of share with you the whole thing. Daryl already knows. Brother Daryl already has it set up. So there we are. Thomas, yeah. So I just click on it? Yeah.
Yeah, I can show that screen too.
Oh, yeah, please
have the link.
You bet. Thank you. Oh, there we go. Advanta. Holy cow.
Yeah, they have you. I guess the question is how. Okay, so that's all audio, not video.
Oh, okay. How to do it? You mean you want to see how to do it, or what were you thinking?
But yeah, specifically, I would like to see, because obviously when I'm interviewing, I want to be able to have the credibility with them to host the webinar So I guess the question is, if you had anybody, or this Alex Perney as an example, if you had any contacts to reach out to see if we'd be able to.
Yeah, surely. I will just put you in touch with Alex. You bet. I hope he's still there. And then you just meet with him, brother, and you say, you know what? My partner is not here today. That's what I always say that. My partner is not here. Can I record it with your permission? They'll say yes. So I record almost everything with my meetings, and then Monica can watch it when other people in the team can watch it. So I would say, Alex Perney, I'll just put you in touch, and then you could go from there. You bet. Excellent, excellent. All right. Any other questions? Any other things we should talk about, or should we call it quits and say happy holidays, and we'll see it in January, right? Next week, everybody will be busy. What do you think?
Sounds good, and hopefully we have a lot of updates then for you come beginning of January.
Yeah. Yes. That'll be exciting. Thank you so much. Thank you, everybody. And thank you, Uncle. Thank you, Dave Mulvaney. David, so good to see you, brother. Yeah, that was amazing.
Bye, guys.
Thank you. Bye-bye. Bye-bye.
Thank you for spending your valuable time with us today. I hope this episode gave you insight, clarity, and encouragement as you continue your journey towards building wealth, freedom, and long-term impact. If you found value in today's conversation, please subscribe, give 5-star reviews, and share this episode with someone who is serious about learning, growing, and investing smarter. Your support helps us to reach more people and bring them into our show. Before we wrap up, here is an important reminder. This podcast is for educational and information purposes only. Nothing shared here should be considered investment, tax, or legal advice. Every investor situation is different and unique, and decisions should be made based on your personal goals and circumstances. I strongly encourage you to consult with qualified professionals before making any investment decisions, including experienced teams like Monili Investment Group, along with your CPA, attorneys, financial advisors. Thank you again for being a part of the community. Until next time, keep learning, keep growing, and keep building your wealth with intention. See you in the next episode.
That's all for this episode of the Investor Impact. Stay tuned for the next episode and don't miss out on the opportunity to learn and grow alongside this powerful inner circle.